Have you ever wondered, can I really start investing with just $100? Then this video is for you. Hi, I'm Warren with Warren's Money Buffet. Maybe you have seen TikToks promising to turn $100 into a Lamborghini. Or maybe you just want to stop feeling left out when your friends talk about their portfolios. Here is the truth. In 2025, you absolutely can start investing with $100. Today, I am going to walk you through how to do it, step by step, using the latest tools, strategies, and real market data. Grab your phone, open your Notes app, and let's turn that first $100 into the foundation of your financial future. Let's bust a myth right away. Investing is not just for the rich. The biggest mistake you can make is waiting until you have enough money to start. The earlier you start, the more you benefit from the magic of compounding, even if you are only working with a small amount. Over the last 15 years, the S&P 500 has averaged over 13% annual growth. That means even small investments can grow big over time. So, what are your options in 2025? The world of investing has never been more accessible. You do not need a Wall Street broker or a suit. You just need a phone, an internet connection, and a willingness to learn. Let's start with the basics. Where do you actually put your $100? There are three main options for beginners. First, a brokerage account. Think Fidelity, Charles Schwab, Robinhood, or E-Trade. Second, a robo-advisor, like Betterment, Wealthfront, or Acorns. Third, a retirement account, like a Roth IRA or a 401k if your employer offers one. If you want full control and to pick your own stocks, exchange-traded funds or funds, open a brokerage account. In 2025, almost every major broker has zero commissions, no account minimums, and user-friendly apps. Fidelity and Charles Schwab are favorites for beginners because they offer fractional shares, meaning you can buy just a piece of a stock like Apple or Tesla, even if one share costs hundreds of dollars. Robinhood is great for mobile-first investors, and E-Trade is perfect if you want more research tools. If you want a hands-off approach, robo-advisors are your friend. Apps like Betterment and Acorns let you answer a few questions about your goals. And risk tolerance, then automatically invest your money in a diversified portfolio. Acorns even lets you round up spare change from purchases and invest it, so you can literally invest with pennies. These apps charge small fees, usually $1 or $2 a month, or a low percentage of your balance. If you are thinking long-term, like retirement, consider a Roth IRA or your employer's 401k. With a 401k, your company might even match your contributions. That's free money. And with a Roth IRA, your investments grow tax-free, and you can open one at almost any brokerage or robo-advisor. So step 1. Pick your platform. Here is how you do it. Compare fees. Most are $0 for trades now, but check for account fees. Make sure you can buy fractional shares if you want to invest in big-name stocks. Choose an app or website that feels easy to use for you. Once you have chosen your platform, it is time to open your account. This is easier than ever in 2025. You will need your social security number, a bank account for transfers, and a few minutes to fill out some forms online. Most accounts are approved instantly, and you can fund your account with as little as $1. Now here is where a lot of beginners get stuck. What do you actually buy with your $100? Let's talk about strategy. The safest, simplest way to start is with index funds or exchange-traded funds. These are baskets of stocks that track the overall market, like the S&P 500. Why? Because low-cost index funds are one of the best bets for building wealth over time, especially for new investors. You get instant diversification, owning a tiny piece of hundreds of companies, and you do not have to worry about picking the next Tesla or Apple. For example, the Fidelity Zero Large Cap Index Fund and the Schwab S&P 500 Index Fund both have no minimum investment and zero expense ratios. You can also buy exchange-traded funds like VOO or SCHB, which track the S&P 500, for under $100 a share. If you want to invest in tech, try QQQ, which tracks the NASDAQ 100. But what if you want to own a piece of your favorite company? Apple, Disney, or even Tesla? In 2025, you can buy fractional shares through most brokers. That means if Apple is trading at $200 and you only have $20, you can still buy 0.1 shares. This is a game changer for small investors. Fractional shares let you diversify even if you are starting with just $100. You can put $20 into Apple, $20 into Microsoft, $20 into Disney, and $40 into an S&P 500 fund, all with one trade. If you want to get a little more creative, consider real estate investment trusts, or REITs. These are companies that own properties, apartments, malls, warehouses, and pay out most of their profits as dividends. You can buy REIT stocks like Realty Income or REIT exchange-traded funds for under $100. It is a way to get exposure to real estate without needing a huge down payment. And if you are feeling adventurous, you can even dip your toes into crypto. In 2025, there are regulated Bitcoin and Ethereum exchange-traded funds available in the United States, so you do not need to mess with wallets or exchanges. Just remember, crypto is still very volatile, so keep it a small part of your portfolio. Now, let's talk about how to actually make your first investment. Once your account is funded, search for the fund, exchange-traded fund, or stock you want to buy. Enter the amount. Remember, you can buy fractional shares. Choose a market order if you want to buy at the current price, or a limit order if you only want to buy at a specific price. Hit buy, and congratulations, you are now an investor. But do not stop there. The real secret to building wealth is not picking the perfect stock. It is consistency. Set up automatic contributions, even if it is just $10 a month. This is called dollar cost averaging, and it helps you buy more shares when prices are low and fewer when prices are high, smoothing out your returns over time. Let's talk about risk. All investing involves risk, even with index funds. The stock market goes up and down. In 2022, the S&P 500 dropped 19%. In 2023 and 2024, it bounced back, and as of May 2025, it is up about 8% year-to-date. The key is to stay invested for the long term. Historically, the market has always recovered and grown over time. If you are worried about losing money, keep your emergency savings in a high-yield savings account, not in stocks. In 2025, online banks are offering around 4.5% annual percentage yield on savings accounts, much higher than traditional banks. This is a safe place for your rainy day fund, but not for your long-term investments. Now, let's answer some common questions. Should I wait for the market to drop before investing? No one can time the market, not even the pros. The best time to start is now. The longer your money is invested, the more it can grow. What if I am under 18? You can start with a custodial account, with the help of a parent or guardian. The key is to start learning and building good habits early. What about hot stocks or meme stocks? It is tempting to chase the next GameStop or AMC, but these are risky bets. If you want to play, use a small, fun money portion, maybe 10% of your portfolio. Keep the rest in diversified funds. How do taxes work? If you invest in a Roth IRA, your money grows tax-free. In a regular brokerage account, you will pay taxes on dividends and any gains when you sell. But if you are just starting with $100, taxes will not be a big issue yet. Let's do a quick recap of the steps. Pick your platform: brokerage, robo-advisor, or retirement account. Open your account online. It takes minutes. Fund your account with $100 or even less. Choose your investment: index fund, exchange-traded fund, fractional share, or REIT. Place your order, market or limit. Set up automatic contributions. Leave your money to grow. And do not panic when the market dips. Now let's talk about mindset. Investing is not about getting rich overnight. It is about building wealth slowly, over years and decades. The most successful investors are patient, consistent, and disciplined. Warren Buffett started investing at age 11, and most of his wealth came after he turned 50. The lesson? Start early, keep going, and let compounding do the heavy lifting. If you want to see how $100 can grow, let's run the numbers. If you invest $100 and add just $10 a month, earning the S&P 500's historical average of 8% per year, you will have over $2,000 in 10 years. If you bump it up to $50 a month, you will have over $7,500. And if you keep going, that snowball effect can turn small beginnings into real wealth. Let's get real. You might not get rich off your first $100, but you will build habits, confidence, and a foundation that can change your financial life. The hardest part is starting. Once you see your money working for you, you will want to keep going. A few bonus tips for 2025. Watch out for fees. Most brokers are free for trades, but some robo-advisors charge monthly or percentage fees. Compare before you commit. Use resources like NerdWallet, CNBC, and Reddit's r/investing for beginners for up-to-date advice and reviews. Do not fall for get-rich-quick schemes. If someone promises to double your money in a month, it is likely a scam. Keep learning. The best investors never stop reading, watching, and asking questions. Finally, remember, investing is a journey, not a sprint. Your first $100 is just the beginning. Celebrate it. Take a screenshot of your account, set a reminder to check in every month, and watch your progress. Over time, those small steps add up to something big. If you found this helpful, hit subscribe, drop your questions in the comments, and let me know what you are investing your first $100 in. And if you want a step-by-step walkthrough of opening an account or picking your first exchange-traded fund, let me know. I will make a video just for you. Here's to your first $100 and to the next 10,000. Start today. Your future self will thank you.